The market is heating up, and one of the projects sitting right at the center of this storm is SEI. This is one of my favorite proof-of-stake Layer 1 blockchains, and I've said it before in earlier videos, I'm extremely bullish on this project. The momentum building behind SEI right now is unlike anything we've seen from competing chains, and the data proves it. When it comes to new Layer 1s, history is full of bold promises. Ethereum killers, Solana killers, SEI killers, you've heard it all before. But most of those chains stumble when it comes to real adoption. Ecosystems stall, developers lose interest, and the hype fades away. SEI, on the other hand, has flipped the script completely. Behind the scenes, adoption has been nothing short of incredible. The team has been securing major partnerships, onboarding liquidity, and even pushing for ETF filings that put SEI in a league of its own. Stablecoin activity on SEI is accelerating at a rapid pace, with more and more liquidity beginning to flow into the network. The narrative is clear. Markets move faster on SEI. And that isn't just marketing. The throughput, the low latency, and the settlement speed make SEI uniquely positioned to be the global settlement layer for financial markets. Every metric, transactions, active users, trading volume, is trending to new all-time highs. But all of this progress means little if you don't secure your own capital. The Tangem wallet is the best cold wallet on the market, and it's the one I personally use to store my crypto safely offline. With the link in the description or the pinned comment and the code MONEYGLITCHER, you'll get 10% off when purchasing your Tangem wallet. In a space moving as fast as SEI, protecting your assets is just as important as spotting the right opportunities. Now back to SEI. What's even more important is how the broader community and enterprises are responding. ETF filings and strategic partnerships are all pointing in the same direction. SEI is no longer just a promising idea. It's becoming the execution layer for real capital flow. That's the difference between hype and fundamentals, and SEI is showing both at once. Now, from a valuation perspective, the numbers speak loudly. At just 33 cents and a $2 billion market cap, SEI is massively undervalued compared to the traction it's already achieved. For a proof-of-stake blockchain showing this level of adoption, partnerships, and real-world integration, a conservative mid-case valuation lands somewhere between $20 and $50 billion. That's a 10 to 25 times return potential from here. And if the altcoin season hype cycle kicks in with full force and SEI captures the absolute peak of that season, breaking above $50 billion is not just possible, it's probable. Personally, I've taken two very strong positions in SEI. My first entry was around a $1 billion market cap when the price was close to 17 cents, and the second was at 24 cents. From those positions, the asymmetric upside is enormous. The chart itself looks primed for a breakout, and with macro conditions from the Fed aligning toward risk-on assets, the timing couldn't be better. SEI is ready to explode. The adoption, the fundamentals, the institutional interest, it's all lining up perfectly. With activity and transactions accelerating across multiple timeframes, the signal is clear. SEI is emerging as the preferred settlement layer for global financial markets. The data speaks for itself, and I'll close with this. Patience and conviction are the twin engines of wealth. Those who recognize true fundamentals before the crowd almost always write the history books of crypto investing. Dr. Money Glitcher.